One of the big things that I'm working on for my own business in 2025 is focusing on doing more and putting more of my energy into the things that make me the most money, which seems like such an obvious thing to do. Like, who wouldn't want to focus on the things that make them money? But I think that as entrepreneurs, I've seen hundreds of financials at this point, and I've been in business since 2018. So however many years that is, 7 almost. I have just seen so many people, myself included, who get sidetracked by squirrel brain. We constantly want to create new things because frankly, it's fun. We typically like to create new things, and that's part of what got us into business ownership in the first place. But realistically speaking, the fastest path to making more money, to improving your bottom line, to being able to have more cash in your bank account, and to building wealth is for you as a business owner to focus your time and then to make sure that you're leading your business to focus on the money makers with most of your time and most of your energy versus spending a huge chunk of your time trying out all kinds of different things. Figuring out what makes you the most money and really honing in on that is the fastest path to building wealth. So what I'm going to walk through in this episode is how you can use your own data in your business to help you make that informed decision about what is working the best in your business. So we're going to talk through what data you need and then what questions you need to ask as a CEO in order to identify what things you can potentially let go of and what things you really need to double down on as we continue into 2025. So in this video, I'm going to kind of connect the last 2 episodes that we released around determining whether your business is financially healthy and how you can incorporate more consistent CEO dates. Because in those CEO dates, one of the things you want to be asking yourself consistently is, how can I do more of the things that make me more money in order to create a more financially healthy business? So I think the most important thing that I want to answer first is understanding what I mean by make more money, because I don't necessarily mean doing more of the things that drive the most top line revenue. If you haven't been around here for a long time, you better get used to me driving home the point that I think profitability is vastly more important than revenue. And yes, obviously we need solid revenue numbers in order to drive profitability. But when you look at your data, and I'll talk about what data you want to look at and what questions to ask, but when you look at your data, you're going to see things that drive more and less profitability. And I think really honing your business into the things that help you make more bottom line profit is going to make your business more financially healthy and more sustainable in the long run. So you can make more of a return on the time and energy you invest into your business. So you can ultimately work less, build up more cash, become work optional, have a business that can run without you, and do all the things you want to do. It really starts with profitability. So the first thing that my team does if we are doing this work for you is to dig into your data. The thing that you want to pull up in your data is you want to go and pull up your sales record. So wherever it is that you have all of your transactions, whether that is a report in QuickBooks, if you use QuickBooks invoicing, whether that is another payment processor. We have a lot of brick and mortar service businesses in the health and wellness space, for example, that use different payment processors like Boulevard or Jane or any number of different software systems. Go into the system where you record your sales and just pull a report that shows you all of your sales. When I look at a report, what I want to see is I want to be able to see your transactions that show me sales by month, or at least that I can add up and figure out total sales by month. I want sales broken down by offer or by product service, whatever you sold, so we can see which of the products and services you sold the most of. I want sales by location, if you have multiple locations. I want sales by business line if you have multiple business lines. Like for example, at Young & Co, we have a tax and a CFO business line. So I like to break my sales down by those 2. But we're going to take all of your sales data and basically look to group it into these key buckets. I also would really encourage you to look at sales by client. So a few weeks ago, I did a metrics episode, and one of the metrics I think that's really important is lifetime value, or LTV. So pulling sales by client by month, preferably, so that you can see how much does the average client spend with you on a monthly basis and how long do they stay. I also think is important. And so depending on the system that you use to record your sales, you might have to run a few different reports, but you're basically just going to go and run all of the data so that you can then add things up by offer, by business line, by location, by client, however it is that you sell your offers and run your business. The other piece of data that I think is really important is profitability by each offer. So I talked about this back in the episode that I did on pricing, asking if you're undercharging, but you can use my sales plan and pricing tool, which we'll link in the description under the video, to calculate for each of your offers. You can input the cost it takes to deliver that offer to see which offer is the most profitable. So the sales data is obviously important, but we also want to know, out of the sales that you make for this particular offer, how much are you actually keeping after you pay to have that offer delivered? So what you're going to do with your data is you are going to group it again by month or by client, by offer, by business line. Again, ask yourself, what is it that makes the most sense for your particular business? For my agency business, as an example, I have sales by offer in my sales tracker. I have a spreadsheet that tracks months as the columns going across. I have a section for each offer that my clients are in, and then I have a row for each client. And then in each cell, I put, here's the total revenue that each client paid by offer by month. So I have that nicely broken down. But your business might be different. So if you have a different type of business, let's say you have multiple locations, you might want to break it down in a different way. So that's the first thing you're going to do. And if this feels overwhelming to you, if you're not sure how to do spreadsheets, if you feel like spreadsheets is not your forte, I'm going to tell you ChatGPT is amazing at helping people to break down your spreadsheets. You can try different things. You can copy paste the information you have in your report and ask it to do some math for you. I will say sometimes you have to check the math in ChatGPT because it's not made to be a calculator. It's a language processing tool. But at least as a starting point, you can ask it to review the report and pull out some insights. You can ask it specific questions and ask it to answer the questions based on what's in the report. You could even ask it and say, hey, I have this report. Here's what I have. How can I summarize this? Give me the exact formula to put in the cell that you can literally copy paste. Give me the exact formula that is going to tell me average revenue by client or average revenue by month. And it will literally tell you exactly what to copy paste. If you're not using ChatGPT, it is an amazing tool if you know how to prompt it. So that's what I would do if I was not super comfortable with spreadsheets. I will say though that having a sales tracker, I think this is important, especially for agency style businesses where you have monthly recurring revenue, or maybe you work on a project basis and you tend to have fewer clients but more premium offers. I really think it's important to build out a sales tracker. It's something that we have historically done for all of our CFO clients, where literally in my set of spreadsheets that I review on a weekly basis, I've got my cash forecast and I have a sales tracker. And it's something that I go in, or my COO will go in and update when we close a proposal or when a client rolls off or when something changes. We'll key that in so we have a projection of what we're going to expect in terms of revenue over the next 6 to 12 months. So if you don't have that, I highly recommend taking some time to set it up. And again, if you need help doing it, I would ask ChatGPT to help you think through how to structure this in a spreadsheet. Okay, so once you pull your data and once you set it up to summarize your data by whatever metrics make the most sense to you, you're going to ask yourself some questions. So reviewing the data and being able to pull insights out of it in order to make decisions about what makes you the most money, what's not making you money, what should you do more of, what should you do less of. So some of the questions that I would be asking were, where do I see the most sales coming from? And how much sales? Do I see trends over time? And then even more importantly, if you have gross profit on your financial statements, you can pull, or if you can do the math and say, my gross profit for this offer averages 70%, do the math and ask yourself, which offers are making me the most sales and the most profit and the least sales and the least profit? And then using that information to say, okay, we either need to increase the profit by raising our price or reducing the time that it takes or the cost of delivering the offer, or we need to scrap it all together and focus on this one offer over here instead because it makes us more money. The next thing I'd be asking is going back to LTV or lifetime value. And so looking at the data by customer and saying, how long do customers stay? How much money do they spend on average? Are there any customers who spend a lot of money, and digging into why? Why is it that they stayed so long? Was there something that you did in the offer? Was it the type of customer who just had a higher need for whatever it is you provide? But asking if there's any trends that you can point out with your top 20% of customers. I think it's the Pareto principle. I don't know if I'm making up that word. I think it's the Pareto principle is the 80-20 rule. So 20% of your clients are going to make 80% of your revenue and hopefully also 80% or more of your profitability. And so this is where it's really helpful to really dig into who's our best customers, like who's in the top segment, and ask, can we let go of some of the clients who aren't in that top segment? How can we get more of these clients? And really digging into, based on the data, again, who they are and what kind of messaging, what kind of offers really resonate with these so you can bring more of them in. The other thing I'd be asking is, when you see some trends about a particular offer or location or client or whatever that seems to be outperforming the others, I'd be asking why. So why is it that this offer is outperforming? Like, what drove that? Was it the pricing? Was it the way that we generated leads for it? Was it how much it costs to deliver it? It could be any number of things, but really digging into why, and then asking again if this is something you can apply to the rest of your business, or if it's worthwhile just focusing on that one thing. So I talked about this briefly in some of my previous episodes that have come out so far in 2025, but I'm going to tell you that I made the decision to really focus heavily on our monthly retainer clients for Young & Co. and even shifting the way that we do those offers, we deliver those offers a little bit, to focus more on the clients who have gotten the best results. Because I did this exact exercise of pulling the data, which I think I talked about in the episode that I did a few weeks ago about metrics. So I pulled the data, tracked the metrics, and then I sit down and ask myself the big picture questions of what's driving this and why, so that I could see, okay, we need to focus on these clients because not only is the profitability so much better on these clients, retention is better, results are better, lifetime value is better. Like when I did the lifetime value between our monthly clients and then another one of our offers, I think the difference was like 25x. Like these clients are literally worth 25x more to our business than the clients in another offer. And not that that's the only thing that would like make you choose to do one offer over another, but when you think about return on time and return on effort, if I see that my lifetime value is that much better and the results are better and retention is better and our team is so much happier doing a certain type of work, we need to double down on that because that is our niche. And I know that I have some accountants and tax people who listen to my podcast. And I do want to say that like if you see a business like mine in your industry doing one particular thing, that doesn't mean that that's the right answer for you, because your data could tell you something completely different based on your skill set and expertise, based on the offers that you have, based on the clients that you work with. You could draw a completely different conclusion from your data because everybody's data is unique. Everybody's business is unique. So if there's one takeaway that I personally have for my business, and that honestly I've been giving this advice to a ton of our clients lately, it is really to stop trying to do all the things, to stop paying attention to what is trendy in the online space, and really just dig into what your magic sauce is, to dig into the things that really light you up to provide, and asking yourself how you can structure a business and how you can structure your offers and team in a way that allows you to have that impact and get your clients really great results, but in a way that also at the same time makes you really great money so that you can hit all of the goals that you have for your business, your money, and your life. So your tangible takeaways are going to be: take some time, maybe in a CEO date, to dig into your data. If it's overwhelming, rely on ChatGPT and see if that can help you understand how to break it down. Even to answer just a couple of questions, I think is better than digging your head into the sand and trying to throw spaghetti at the wall and hoping that what you're working on is finally going to be the thing that works in your business. Instead, we want to be more intentional. We want to be more focused and just doing more of the things that really are going to make you a return on your money so you can capitalize and see the fruits of all the labor and all the effort that you put into growing your business. I will say that if you have a bigger business and this is something that is really overwhelming to you in terms of knowing how to wrangle the data and how to make financial insights, this is exactly what we do with our CFO clients. It's one of the first things that we dive into once we have a clean set of financials. So the first step to bring on a CFO team and a financial advisory team for your business is to fill out our financial health assessment at trustyoungco.com/financial health. All right, so that's it for this one, y'all. I'll see you back next week.